and I assume all of you are using our free intraday tool. And in this particular tool, lot of new things we have added. So there also we have made certain provisions wherein you can utilize this tool beyond the trial period of 7 days. So before going to those offers and other things, let me introduce the tool. So this is how the tool looks like. This is how the tool looks like. There is a login screen. Post logging in, you are coming to this page. So it has Fibonacci study, volatility study. In Fibonacci, we have given 3 studies for you: parallel projection, trend estimation, and Fibonacci retracement. We have also given Cambrilla, Elliot, pivot point, our newly innovated GAV. These studies we have given to you. However, couple of studies we have just kept it for the paid edition. Volatility study you will not get in this free edition. So this is available on the paid edition. And pair trade and option analysis also is not available in this free edition. So it will come in the paid edition. And we also have given a graphical presentation of all the analysis in the summary tab. If you click on the summary tab, you will get how many studies are recommending you to buy, how many studies are recommending you to sell. So here in one click action, you can able to make the trade decision. With only one click itself, you will get all your trade decisions. So gann study is already programmed in the GAV. GAV stands for gann angle and volatility. And all these principles, Fibonacci, Elliot, Cambrilla, pivot, everything we have used the dynamic approach. As I used to say, dynamic approach means all this principle without changing those principles very ethics or without changing the original formulae ratios of those principles, we have just introduced the volatility into it, and by that process we have programmed it. So also we have added one more new feature in this particular tool, which is your cycle theory. So to save out the cycle theory, imagine in this order, suppose you have taken a reading from a low to a high and you have drawn specific Fibonacci retracement lines. Imagine at a point X, these retracement lines are ending. So this, you have taken a low and a high Fibonacci ratios, all of you will be knowing 0.236, 0.382 like that. And you have drawn the Fibonacci retracement lines to the maximum saturation point of 1.618. Imagine this you have done. So post achieving this 1.618, what will be the price? Whether one new trend will emerge and it will continue further, or there itself the price will stop. So as a stock market trader, you will see that after achieving specific price points, price never stops there. Either it reacts to certain things, moves in a new trend zone, or it used to react adversely or fall down. So anything happens, price is nothing but a variable quantity here. Price will vary, so that is the truth of the market. So for that, if this particular retracement principle ending at 1.618, then the next retracement, where it will start and where it will end, that part is known as your cycle theory. So once your trend, one part of the trend what you have calculated, it saturates and ends at a point, then the next trend from where it will start and where it will end. So that is known as your cycle theory. So we have given 3 cycles here. In intraday maximum cases, the price moves in the 3 different cycles. One trend ends, new trend cycle starts, that second cycle ends, third trend cycle starts. So like this way, maximum trade actions in a intraday moves in 3 cycles, sometimes it goes to 5 cycle also. So we have done those fine tuning of those cycle theory concepts in this particular tool. So how to utilize this tool? As soon as you get into this tool, so you will be, how to use this icon will be there. Once you click on this particular how to use icon, it says that select the instrument, expiry date. If you are choosing the futures, click the load and check the intraday and positional. Positional feature is not enabled in this trial edition. It will come in the paid edition. Then you have to click on the calculate. So that is not mandatory to click on the calculate. Sometimes it will do the calculation of its own. So this is very easy to operate. So suppose if I am just selecting equity, so here certain symbol ICICI Bank is visible. So I don't want ICICI Bank, suppose I want Axis Bank. So I'll be typing AX only after typing this one or two alphabets, so that symbol will appear. So I have selected Axis Bank here. Then I will be hitting on the load data. Once this load data I will be hitting, so it will retrieve the price for me, and it is saying that reference price is 587.7. This is what it has taken, and from there it has calculated. So once it has calculated, as per the GAV analysis, what it is giving, it has told you cycle 1, cycle 2, cycle 3, all calculations are done. Then it is giving you a summary here. Price is at 587.7, recommends wait. So 587.7, if you see, it is sell entry is set at 86.87, buy entry as 88. In between this sell entry and buy entry, price is now. So gann angle and volatility principle never recommends you any trade. It is asking you to wait for some time. What about the pivot points? So pivot point says that the reference price is this 87.7 is in the resistance trend. So this is the resistance side, this is the support side, and moving towards the 591 recommends buy. So pivot principle recommends you buy, and post completing this cycle of resistance number 3, so the pivot principle will enter to the second cycle, and this pivot principle can go maximum till cycle 3. So once you are buying in this particular cycle, you must ask me where I should put the stop loss. Definitely, if you are a pivot point trader, so your pivot point is 585.82. Currently, reference it is being taken 587.7. Market price may be little different. So it is recommending you to buy. Once you are buying it here, your first support or the pivot point itself, you can put it as a stop loss as per the pivot principle. Same way, if you go for the Elliot principle, it will give you in the wave structure. So it is in the impulsive wave structures, wave 5 retracement level, it is now, and wave 5 it is there. So it is telling that it is in the rising wave, and it is between the 585 to 589. So this is wave 5, recommends wait, because wave 5 is a last wave of a impulsive cycle. Then there is a expansion if it happens. So if there is no expansion, then it may retrace back. So it is telling that since you are in the last wave of this impulsive cycle, better to wait. So corrective cycle, what it says, if you select the corrective cycle, it also recommends that you are in the wave C of the rising corrective wave. If you consider, then also you are in the wave C. This too also says you wait for the one clear trend to emerge. Then go back to the Camarilla. Camarilla also is saying that recommends buy, considering you are moving towards the 89. If you move towards the 89, then your second cycle will be starting, so which is the end of this your second cycle. So once 89 if you are achieving, you may move to 92 zone. So Camarilla, if you'll be knowing that. So you are at 87 reference point and moving towards the 89, and once you are moving beyond the 89, means if you are buying in this level, so L4 level will be your stop loss, first L4 level. Or you are in the second cycle, if you are now nearing to the second cycle, so you will be putting the L4 of the second cycle as a stop loss. Stop loss I'll take separately. So now Fibonacci trend, what it says, it is in the growth trend, buying is recommended. Fibonacci parallel projection, what it says, it is also in the growth trend, recommends buy. Fibonacci retracement also says that you are in the growth cycle, so you try to buy. So summary, if I check here, 1 out of 9 suggests the buy, 0 out of 9 suggests the sell, and 8 out of 9 are neutral. So GAV is neutral, your Elliots are neutral. So here many views are coming towards the neutral. So in this particular situation, it is better to wait for one clear trend to emerge, then only I can buy it. So similar way, if I am going for the index future and I am going for bank nifty, say I'll just type bank. So bank nifty will appear, load data. Once the data is loaded and all the analysis will be done simultaneously. So it is saying that downtrend cycle 1 as per the GAV analysis recommends sell. Similar way you will be other analyses will be showing. So let me talk about the stop loss here. Imagine from the top itself we will be discussing the stop loss factors. Now you are in the cycle 1. Cycle 1 buy entry is at 18,895. Reference price has been taken 18,840. So here no problem at all. So you can buy it here. And your first cycle, which is falling just vertically downwards here, 18,797 will be your stop loss. If it is touching 18,895, buy it here. Keep a stop loss of 797. Imagine if you are falling in the cycle 2 here. So same time, if you are falling in the cycle 2, current reference price is recommending you are in the cycle 2, then you need to follow the cycle 2's, whichever the, if it is in the target 1 and target 2, cycle 2's target 1 and target 2 level will be your stop loss. But that time these figures will change. So don't compare this figure of 19,234 with the 18,400. Because once it is in the cycle 2, these figures will change. These figures will change if you are in the cycle 2 target 1 and target 2. So based on that reference price, this sell entry target 1 target 2 will be estimated. So you can refer this cycle. So this is how you can put the stop loss of your trade, irrespective of any method you are using, Fibonacci or Fibonacci parallel, Fibonacci trend, Camarilla, Elliot, whichever cycle you are in, wherever your price is, so based on that you have to put the stop loss. New Fibonacci study, I have given you Camarilla, Elliot, pivot, GAV, everything. Which study you will follow? Suppose if you are going to get all these studies you got, it is fine. You got the summary, that is also fine. But which study I should follow? Which one is going to work for me in the real trade? Whether I should follow Fibonacci or parallel projection, trend, Camarilla, Elliot, pivot, GAV, which one I should follow? So that is the most important aspect of this thing. So here, in a gross basis, many of you will be using the technical studies. Many of you will be using some or other method for your trade decisions. If I will say you, many of you will be seeing those RSI, MACD, stochastics. You will also be seeing some candle patterns. You will also be seeing some graphic patterns. So there, how do you decide? So the buy sell signals will be different for different methods, whatever you are following. So there you will be following any one of the buy sell signal. Though on gross basis, you will be deriving that what is the maximum study out of 100 studies, how many studies are recommending me to buy, how many studies are neutral, not giving me anything whether to buy or sell, how many studies are telling me to sell. So if you, this summary is being given to give you a confidence that yes, most of the studies are recommending to buy, let me buy. Most of the studies are recommending me to sell, so let me sell. So this is what the meaning of this summary. After seeing this particular summary, you can follow any one of the things which is convenient for you. You may follow GAV, you may follow pivot, you may follow Elliot. But in that time, you do not say that, yes, I have followed the GAV, but it has touched Elliot levels. Maybe, based on that volatility condition, it may touch. But any one study you follow for your trade entry, profit booking, and your stop losses. Any one study you follow. But whilst in the gross basis, it is very important to know a clear trend. And many of you, those who have used this software, many of the users has written to me by email. They are saying that in this particular software, whenever we are finding out of 8, 5 studies are recommending to buy, 5 studies are recommending to sell. The majority of studies, when they recommend to buy or sell, that time my trade outcomes are very amazing and I am going to get the success. And I am going to get a great success there. So this is how you should utilize this software. When your maximum number of studies are saying that yes, you should buy, better you buy it. Out of 8 studies, currently we have put in the 8 studies, but in the paid version we may have some 25 or 30 studies we will be putting. So the very idea of giving you a summary is because it is practically impossible for a trader to make the computation as per Fibonacci, Elliot, Camarilla, Pivot, Gann, and most of the technical studies. And to summarize, how many studies are giving me to buy or giving me a green signal to buy, and how many studies are giving me a green signals to sell. So here, if a majority of the studies are in the side of or giving you a green signal to purchase, so then you can confidently purchase it. And once you purchase it, then question comes, any which one method I should follow. You follow GFE if you are confident enough, or you can follow the Fibonacci retracement, which is a very fantastic principle. So we have not used that principle as a very static way. We have made it as a dynamic proportion. So the power of that same Fibonacci retracement, parallel, and trend identification process has increased to multifold, because we have integrated the current volatility which is present in that particular instrument at that particular time, and using that particular volatility we have again redevised into the cycle form. Once one trade ends, suppose you can say in this bank nifty study what I have shown you, suppose if it is as coming here to 18,781, whether the price will stop there, it will not fall further, it will just stop there. You'll say that no, it is for the day you have calculated, so I am obeying that, and I'll move within 8,858 to 8,781. No. So here the first cycle ends. Then there is if further selling pressures are there, then the second cycle will emerge. Second cycle will start here, and second cycle will be ending at a particular point. If the second cycle also ends, then the third cycle will start. So intraday, maximum cases, if there is a trend breakout, third cycle used to get completed. Sometimes it moves beyond the fifth cycle also, and these cycles are not estimated in a static way. Dynamically it is estimated. So whenever the prices will change, it will enter to the second cycle. Your stop losses and other factors also will change accordingly. So this is about the tool. So before Before I'll go to the other interesting aspect of this tool, I'll put it to the Dr. Meeta, who will explain our products and services.
Arranged today's event. Please do take advantage of it. Here is the details of the products available in our domain. Total 11 products we have. You can see the names as they are mentioned. Option strategy, we have a software for gann angle volatility, we have one. Then volatility, Fibonacci, WD gann course, technical analysis, future and option course with pair trade, then master Elliot wave, investor course. Like that, we have total 11 varieties of products. In each of these products packages, we are giving you 3 DVDs, 1 book and 1 real-time software. In most of the packages, this is the package inclusion. So totally, if you take all the 11 products, that will give you 18 DVDs, 6 printed books and all our software tools. Around 18 software tools will be available. The software tools, then the trial version, you can see we are giving in the trial software as it is just being shown to you by Mr. Ranjan. And when you buy the products separately, we will give you the paid products having 1 year validity, which is renewable after 1 year. So if you wish to take all those products, then what is the amount? We have separate payment options available for separate packages. Like you can see, each package costs you starting from 1,500 to 10,500 rupees. So separately when you buy, all courses will come to 47,050 rupees. And together, when you club all the 11 products, there is a huge discount that will come at the cost of 17,500 rupees, 63% discount on the entire range of the products. Now coming to the super discount for today's webinarians, because you are amongst our valuable trial users. So there is a special offer for you only for today. I repeat, this offer is only for today. Instead of 17,500 rupees, you can buy all our products at the cost of only 14,500 rupees. That will give you all the softwares what you are seeing in our domain, all the books and DVDs. And I do not have to mention the books and DVDs content, because these are being written by Mr. Ranjan only, and the DVDs are the studio recorded lectures of Mr. Ranjan on the concerned topics. The concerned topics are explained in terms of Indian market with the frontline examples of the market. So very much comprehensible for the readers to understand and follow it. And full package buyers will be getting another advantage. They will be in our priority invitee list to attend the upcoming free webinars of Mr. Ranjan for the coming 3 to 5 months. So in that, the cost of 14,500 rupees, you will get all these. The second advantage of the full package buyer is the free trial tool what you are getting. You are getting it in a single platform, almost all the tools of Smart Finance, which is till date not available in a single platform. Till date, we were having the option strategy in a separate platform, pair trade in a separate platform, integrated tool is a separate platform, all that. But for the first time, the full package buyers will be getting the tool as you are seeing in the free version, all the tools in a single platform. So only the full package buyers will be getting. Though that exactly the free trial version is not available as of now. In a very few days, very soon, in another few days, we will be bringing that, and to the full package buyers it will be free of cost. We will give this tool. Any query? You can do the cash deposit, you can do the check deposit too. This is the banking information available in the bottom. Or if you want to do the payment by using credit card or debit card, then you send us an email. We will send you the online payment gateway. By using that, you can do. Plus, please make sure you make the payment only by today, not applicable for tomorrow. Any question, please put in the chat box.
Are not hidden. So all those techniques, whatever We promote that same techniques. You can find it in our printed books also, our literatures also. You can find out this. And once you are a buyer, you periodically get invited for our programs, like our free webinar events. Normally it happens once or twice in a month. So these are very essence of you are a successful trader. To becoming a successful trader, you don't count your coins every day. Every day, if you start that, yes, today how much I made, today how much I made, today how much I made. So by this process itself, your losses will increase. So if you become a professional trader, your objective is what theory I am following, what method I am following, how rational that method is, whether that method is scalable, whether that method I am able to understand or not. So that should be your aim. And if you are following that things, how you are doing your risk management, and on a yearly basis, on a 6 month basis, on a quarterly basis, how much you are gaining. That is more important. No business in this world can compute their return, whether Tata Steel every day counts the daily sales. So on gross basis, what is the growth? That is very important. Some days you may lose, some day you may gain. But the studies what you follow, that is very, very important. Studies what you follow is very important. And many people used to ask me whether you trade those strategies and other things, whatever you are giving, whether you trade on these strategies, or simply you are for the sake of selling some softwares only, you are just convincing us that yes, I do trade. So here the strategies what I used to recommend in the public forum, irrespective of its loss or profit, I repeat, irrespective of its loss or profit, I do trade that. And I'll show you that couple of yesterday's day for yesterday. Also in the platform, I have given some strategy. I have taken it. You just see, I have closed it also. I have yesterday, whatever the strategy I have taken, given that also I have given. So I have just to see Bank Nifty. I sold along with your 19,500 call option. So intraday basis itself, I have closed it 9:30. So it has some 8 to 10,000 rupees profit it was giving in a delta neutral way. So I have just found this thing. So this is not a hidden things. This I do share my contract notes. This is my name. This is my name, address, my PAN number. Everything is there, and it is the so this trades which is being given in the public public platform, I do take that particular trade. I do take that particular trade also. So these are the things. If you see that, yes, yesterday you have given whether that position is still with you. So if yesterday I have given that option strategy, and day four also I have given one strategy for your Axis Bank. So whether I still possess that trades, definitely I possess Axis Bank. You see Axis Bank. So 3,640 call option I have given. Then Axis Bank's this future I sold 2 lots. So I have little bit of adjustment I am doing. I am that put option what I sold, I book the profit, again I am selling, like that way I am just oscillating. Yesterday I have given for Bank Nifty 20,000 call, and Bank Nifty this is for July, does some residual things. August 19,000 put option I sold, and future also I sold. Future 25 I sold, 19,000 put option I sold, 20,000 call option. When I formed that time one more lot I have taken extra. So that is, I have recommended you 5 lots. I have taken 6 lots, one more lot extra because of my delta value that time. I have taken these positions are open. So positions, whatever I recommend, most of the positions I do take. It is not a fact that is you should recommend and you should not take. You should only advise, you should not initiate the trade. So these are the, and this risk management techniques, yes, couple of trades will be failure. Do not expect all trades to give you the success. Once your projected loss is met, you should come out. So by this process, couple of trades you lose, couple of trades you win. And my estimation says that whenever you follow any option strategic trade, if 50% of your trades are failure, and 50% of your trades also successful, then you also make 5 to 10% return per annum basis. But if you can able to make more than 70 to 75% trades successful, then your profit will be amazing. So that also will, if any you recommend any of your friends, if 3 of your friends downloaded utilize this particular software, then you will be getting the extended validity. You share your trade experience, you have taken a trade based on this particular study, you have achieved profit or loss, whatever may be, share with us, so that we will say that yes, you are utilizing this thing. In that case also you will get some extended validity.